Hello everyone, I'm CA Neeraj B. Welcome back to my YouTube channel at the rate Accounting Buddy NB. I'm so excited because today we are diving into a brand new and super important chapter in our accounting journey, the cash book. If you have ever wondered how businesses keep track of every single penny that comes in and goes out, this video is for you. We will explore what are subsidiary books of accounts and why they are crucial, different classification of subsidiary books, the purpose of subsidiary books in modern accounting, and then we will zero in on the star of the show, that is what exactly is a cash book, what are its features, and the different type of cash books and much more. So grab your notebook and let's get ready to master the cash book. Let's get started.
In this slide, we will understand the meaning of subsidiary books of accounts. Business transactions are numerous and it becomes difficult to record all the transactions in one book of primary entry, that is journal book. It is convenient to maintain a separate book for specific type of transactions, like one record for cash transactions, another to record credit purchases of goods, and yet another record for credit sales of goods. Therefore, subsidiary books are special purpose books in accounting used to record specific type of financial transactions. Instead of recording every transaction directly in the journal ledger, businesses first record them in these books for systematic and efficient accounting. Subsidiary books are special form of journal. It is a subdivision of journal. Journal entry is not passed for the transactions recorded in such books. They are directly posted in the ledger accounts. These books of original or primary entry are also called special purpose books or special journals or subsidiary books. Let us now understand the classification of subsidiary books. Subsidiary books are classified based on the nature of transactions. First is purchase book. Purchase book records all credit purchases of goods meant for resale. Purchase book helps track suppliers' transactions and credit purchases separately from cash purchases. Another subsidiary book is sales book. Sales book records all the credit sales of goods. Sales book maintains a separate record of sales transactions to customers on credit. Another subsidiary book is purchase return book or return outward book. Purchase return book records goods returned to supplier due to defects, wrong supplies, or other reasons. Purchase return book helps track and adjust supplier account for returns. Another subsidiary book is Sales Return Book or Return Inward Book. Sales Return Book records goods returned by customers due to defects or incorrect delivery. Sales Return Book helps businesses adjust customers' accounts for returns. Another important subsidiary book is Cash Book. Cash book records all cash transactions, including receipts and payments. It serves as both subsidiary book and a ledger, simplifying cash management. Another important subsidiary book is Journal Proper. Journal Proper records transactions that do not fit into another subsidiary books, such as adjustment entries, depreciation, and opening and closing entries. Journal Proper ensures all financial transactions are accounted for systematically. Let us now understand the purpose of subsidiary books. Subsidiary books improves efficiency and reduces workload by categorizing transactions. Subsidiary books ensures accuracy and thus minimizes errors in recording financial transactions. Subsidiary books provides an opportunity to accountants to become specialized in handling specific books and thus improves expertise. Subsidiary books are the easy reference and facilitates quick access to transaction details. Subsidiary books ensures better control and helps to track the outstanding dues and obligations effectively. Let us now understand the most important subsidiary book, that is the cash book. A cash book is a subsidiary book of accounts that records all cash and bank transactions of the business. Transactions includes both receipts and payments. It acts as both a journal and a ledger, meaning cash transactions are first recorded in the cash book before being posted to the other ledgers. Since it records transactions related to cash receipts and payments, it helps in tracking and managing the liquidity of the business effectively. Cash book is a book of primary entry in which cash and bank transactions are recorded in a chronological order, that is, in the order they take place. Receipts are recorded on the debit side of the cash book, while payments are recorded on the credit side. Cash transactions are recorded in the cash column and bank transactions are recorded in the bank column. It is balanced by adjusting the total payments from the total receipts to know the cash in hand and the balance at bank. In this slide, we will learn the features of a cash book. Feature number one is it records all cash and bank transactions. It includes all cash inflows, that is the receipts, and outflows, that is the payments, along with bank transactions. Feature number two is cash book acts as both journal and ledger. The cash book serves the purpose of both a journal where the transactions are first recorded and a ledger as it also acts as a cash account. Feature number three is cash book follows dual entry system. Each transaction has both a debit and a credit entry, ensuring accurate recording. Feature number four is cash book always shows a debit balance for cash. Since business cannot have a negative cash, the cash column in the cash book will never show a credit balance. Feature number 5 is cash book is regularly balanced. The cash book is periodically balanced to check the amount of cash or bank balance available. Feature number 6 is cash book helps in cash management and internal control. It allows business to track daily cash movements and preventing frauds and errors. Feature number 7 is cash book is basis for preparing the financial statements. Transactions recorded in the cash book are eventually used to prepare financial statements such as balance sheet and income statement. Let us now learn about type of cash books. Cash book can be classified into following types. First is single column cash book. This is the simplest type of cash book. It has only one cash column on both debit and credit sides. It records only cash transactions of both receipts and payments. No bank transactions are recorded in this type of cash book. Specimen format of a single column cash book is displayed on your screens. Cash inflows or the receipts are recorded in the debit column while the cash outflows or the payments are recorded on the credit column. Second type of cash book is double column cash book. It has two columns on both debit and credit sides. Cash column to record cash receipts and payments, and bank column to record all the bank related transactions, that is checks received, deposited or issued. Double column cash book is used when businesses frequently deal with banks. Specimen format of a double column cash book is displayed on your screens. It has got two columns, cash column and bank column, to record respective transactions. We will discuss recording of transactions in cash book in detail in our subsequent slides. Third type of cash book which is frequently used by the business is called petty cash book. Petty cash book is used to record small day-to-day expenses like postage, stationery, refreshment, etc. Petty cash book is managed by a petty cashier who receives a fixed amount from the main cashier. Petty cash book helps to reduce the burden of recording minor transactions in the main cash book. A cash book is an essential part of financial accounting that records all cash and bank transactions. Depending on the need of the business, it can be maintained as a single column, double column, or a petty cash book. Proper maintenance of a cash book ensures accurate cash flow management and financial reporting. Let us learn more about single column cash book and its format. Only cash receipts and payments are recorded in simple cash book. Simple cash book looks like an account with one amount column for the debit and one for credit. A specimen of a single column cash book is displayed on your screen. Column number 1 is for date. In this column, the date of the transaction is written. Column number 2 is for particulars. Name of the account holder under which cash is received or paid is written. In the existing business, cash book starts with the opening balance of cash written on the receipt side as to balance brought down. A new business will not have an opening cash balance. Column number 3 is voucher number. The document supporting a transaction is called a voucher. Cash voucher could be either a receipt voucher or a payment voucher. Each voucher has a serial number which is written in this column. Column number 4 is ledger folio. In this column, the number of the ledger page is written to which the debit and the credit aspect of the transaction is posted. Column number 5 is debit. In this column, all the inflows or the receipt amounts are written. Column number 6 is credit. In this column, all the outflows or the payment amounts are written. Let us quickly recap the rules of debit and credit for cash account. Under traditional classification of accounts, cash is a real account. For real account, the rule of debit and credit is debit what comes in and credit what goes out. Under modern classification of accounts, cash is an asset. For asset account, the rule of debit and credit is debit when asset increases and credit when asset decreases. Let us now learn how a single column cash book is balanced. Cash book is balanced like any other account. The total of the receipts column is bigger than or equal to the total of the payments column. The total of all the payment transactions on the credit side of the cash book are deducted from the total of all the receipt transactions on the debit side of the cash account. The difference is written on the credit side as by balance carried down. Thereafter, the credit side of the cash account becomes equal to its debit side. On the first day of the next accounting day or the period, as the case may be, the cash in hand balance on the last day of the previous period is written as to balance brought down to show the cash in hand balance in the beginning of the next accounting period. There are certain important observations regarding single column cash book which should always be remembered. When cash book is maintained, cash account is not opened in the ledger. Cash book is balanced like any other account. It does not record non-cash transactions, checks received or given, cash discount allowed and received. When a receipt or a payment entry is recorded in the cash book, corresponding entry is recorded in the respective ledger accounts. For example, if business has received an amount of $4,000 from Tolly, the debit receipt is passed in the cash book and Tolly's account is credited in the ledger. Cash book will always have a debit balance because the cash paid cannot exceed cash in hand. Let us understand how cash transactions are recorded in a single column cash book with the help of business transactions displayed on your screen. Post recording of these transactions, the cash book will look like as appearing on your screens. Let us now understand the recording of these cash transactions in the cash book. On 1st April, Tolly started business and introduced capital in cash amounting to $75,000. This cash inflow transaction of $75,000 will be recorded on the left hand debit side of the cash book on 1st of April by writing the words to capital account. On 1st April, business purchased goods from Polly for cash amounting to $20,000. This cash flow entry of $20,000 will be recorded on the right hand credit side of the cash book on 1st of April by writing the words by purchase account. On 3rd April, business sold goods worth $15,000 on cash. This cash inflow transaction of $15,000 will be recorded on the left hand debit side of the cash book on 1st of April by writing the words to sales account. Now let us do the balancing of cash account for 1st of April. Since cash account will always have a debit balance, let us first do the totaling of the left hand debit side transactions of the cash account, which in our case comes to $90,000. Then from the total of left hand debit side, deduct the total value of all the transactions on the right hand credit side of the cash account. We will left with a balance of $70,000, which will be shown on the right hand credit side of the cash book by writing the words to balance carried down at the end of the day of 1st April. Post which the left hand debit side will be equal to the right hand credit side of the cash account, and thus the account is said to be balanced. Next set of business transactions dated 2nd April are appearing on your screens. These transactions in the cash book will look like as appearing on your screens. On 2nd April, the closing balance of $70,000 at the end of the day of 1st April will be written on the left hand debit side of the cash book by writing the words to balance brought down. On 2nd April, Tolly paid office electricity bill amounting to $1,000 by cash. This cash outflow entry of $1,000 will be recorded on the right hand credit side of the cash book on 2nd April by writing the words by electricity expenses. Again on 2nd April, Tolly took cash amounting to $2,000 for his personal use. This cash outflow entry of $2,000 will be recorded on the right hand credit side of the cash book on 2nd April by writing the words by drawings account. Now when from the total of left hand debit side, the total of all the transactions on the right hand credit side of the cash book is deducted, we are left with a balance of $67,000, which will be shown on the right hand credit side of the cash book by writing the words by balance carried down at the end of the day of 2nd April. Post which the left hand debit side will be equal to the right hand credit side of the cash book, and thus the account is said to be balanced. In continuation to previous slide, now the next set of cash transactions dated 3rd of April are appearing on your screen. Post recording of these transactions, the cash book will look like as appearing on your screen. On 3rd April, the closing balance of $67,000 of the previous day, that is 2nd April, will be written on the left hand debit side of the cash account by writing the words to balance brought down. On 3rd April, goods were again sold for $10,000 in cash. This cash inflow transaction of $10,000 will be recorded on the left hand debit side on 3rd of April by writing the words to sales account. Again on 3rd of April, an amount of $500 paid in cash to a printer for printing the business letterheads. This cash outflow transaction will be recorded on the right hand credit side of the cash account by writing the words by printing and stationery account on 3rd of April. Now when from the total of left hand debit side, the total of all the right hand credit side transactions is deducted, we are left with an amount of $76,500, which will be shown on the right hand credit side of the cash account by writing the words by balance carried down at the end of the day of 3rd April. Post which left hand debit side will be equal to right hand credit side of the cash account, and thus the account is said to be balanced.
Now on 4th of April, the closing balance of $76,500 of the previous day, that is 3rd of April, will be written on the left hand debit side of the cash account by writing the words to balance brought down. Likewise, each cash transaction is recorded in the cash book on the date on which it is transacted. Cash book from 1st April to 3rd of April will look like as appearing on your screen. All the cash inflow transactions are recorded on the left hand debit side of the cash book on the date on which these transactions took place. Similarly, all the cash outflow transactions are recorded on the right hand credit side of the cash book on the dates on which the cash is actually paid. Now, when from the total of left hand debit side of $100,000, the total of all the right hand credit side transactions is deducted, we are left with a balance of $76,500, which will be shown on the right hand credit side of the cash book by writing the words to balance carried down at the end of the day of 3rd April. Now the total of the right hand credit side will also become $100,000. Thus the account is said to be balanced. Now on 4th of April, the closing balance of 76,500 of the previous day, that is the 3rd April, will be written on the left hand debit side of the cash account by writing the words to balance brought down. Let us prepare a single column cash book for the month of December 24 from the following business transactions of Mr. Tooley of Dreamland. Dreamland is the name of his business. Let us understand each transaction. In the beginning of the month, on 1st April, the business has an opening cash in hand balance amounting to $25,000. Cash in hand, being an asset, will have a debit balance and will appear on the left hand debit side of the cash book. On 2nd December, business did a cash sales of $50,000. This transaction will be recorded on the left hand debit side of the cash book since it is an inflow of cash. On 3rd December, business deposited cash amounting to $45,000 in the bank. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 4th December, business received a check of $39,000 after allowing a discount of $1,000 from a customer. Now, whether this transaction will be recorded on the debit or credit side of the cash book? Well, the answer is this transaction will not be recorded in the cash book as it does not affect the cash of the business. On 4th December, staff salary amounting to $12,000 is paid in cash. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 5th December, business owner took $3,000 for his personal use. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 10th December, business collected $10,000 from a customer, Messrs. TriStar LLC. This transaction will be recorded on the left hand debit side of the cash book since it is an outflow of cash. On 15th December, an amount of $2,000 is paid to a staff as advance. This transaction will be recorded on the right hand credit side of the cash book since it is an outflow of cash. On 21st December, business owner introduced $20,000 as capital. This transaction will be recorded on the left hand debit side of the cash book as it is an inflow of cash. On 25th December, business paid $1,000 for office repairs in cash. This transaction will be recorded on the right hand credit side of the cash book as it is an outflow of cash. On 28th December, business again did a cash sales for $12,000. This transaction will be recorded on the left hand debit side of the cash book as it is an inflow of cash. On 30th December, business paid electricity bill for $1,200 in cash. This transaction will be recorded on the right hand credit side of the cash book as it is a cash outflow.
Let us learn how the cash transactions as per the previous slide will be recorded in the cash book. The opening balance of $25,000 will be shown on the left hand debit side of the cash book by writing the words to balance brought down on 1st of December 24. Now all the cash inflow transactions of the sales, collection from the customer TriStar LLC, capital introduced are recorded on the left hand debit side or the receipt side of the cash book on the respective dates on which the business actually received cash. All the cash outflow transactions will be recorded on the right hand credit side or the payment side of the cash book. Therefore, all the cash outflow or the transactions which results into decrease in the cash balance, that is the bank deposit, salary payments, cash taken for personal use, staff loan, office repair and electricity expenses transactions are recorded on the right hand credit side of the cash account on the respective dates on which the transactions have actually occurred. Cash being an asset and the fact that the business cannot pay more than the available cash, for doing the cash account balancing, let us do the total of the left hand debit side of the cash account, which in our illustration comes to $117,000. Now, if you deduct the total of all the right hand credit side transactions from the left hand debit side total of 117,000, we are left with a balance of $52,800, which is written as by balance carried down on the last day of the month of December 24, thus making the total of the right hand credit side also to $117,000. Therefore, the left hand debit side and the right hand credit side of the cash account is now balanced. The closing cash balance of $52,800 on the last day of December 24 will become the opening balance on the first day of January 25 and will be shown on the left hand debit side of the cash book by writing the words to balance brought down. Always remember, cash book cannot have a credit balance. Cash column in the cash book cannot show the credit balance because cash payments cannot exceed cash in hand. When cash payments are equal to the cash in hand, the cash book will show a nil balance. Cash being an asset will always have a debit balance. All the receipts are recorded on the left hand debit side of the cash book implies that the cash book will always have a debit or a nil balance. In next slides, we will learn in detail the process of posting from the single column cash book to the respective ledger accounts, which includes the posting of cash receipts on the debit side of a single column cash book and the posting of cash payments or credit side of a single column cash book.
In my upcoming video of part 2 in this series of the topic, the cash book on 31st May 25, we will cover posting of cash receipts and payment to various ledger accounts, single and double column cash book, contra entries, treatment of cash discounts, cash entries posting rules and the cash book formats. If you enjoy the content of this video and appreciate my teaching style, please subscribe, share and like my YouTube channel @Accounting Buddy NB. Thank you and goodbye for now.